Last week, SPX gave us the exact kind of volatility we've been waiting for. After rejecting near the highs, we saw a sharp pullback midweek before buyers stepped back in to defend key support. That bounce into the weekend shows there's still strength under the surface, but it also leaves the market at a critical crossroads. This week, all eyes are on CPI data dropping Friday, and that could be the next big catalyst to decide whether this bounce continues or turns into something deeper. So in today's video, we'll break down the technical setup on SPX, what the momentum indicators are telling us right now, and, most importantly, what levels you need to watch going into CPI week. Trust me, you'll want to watch till the end because this setup could define how October plays out for the markets. While SPX is still struggling with unrealized, on-paper gains this month, our algo continues to deliver realized profits, not projections, not simulations, actual results, already booked and secured. This is the power of automation. Our algo trades 24 hours a day, 5 days a week, even when you're asleep, at work, or spending time with your family. It never misses an opportunity, never hesitates, and never gets emotional. It's fast, systematic, and effortless, letting you focus on the things that matter most in life while your portfolio grows quietly in the background. And the best part, you can try it out risk-free. Use the promo code 40ALGO for 40% off your first month, and if you're not satisfied with the results, you'll get a full refund, no questions asked, and you still keep your earnings. This is the most hassle-free way to experience algorithmic trading that actually works. Fully automated, fully transparent, and built for consistent gains. So stop waiting for someday. Let the algo do the work while you live your life. Smart money is finally turning up, and that's big. They've been cautious for months, but now they're starting to position bullishly again while dumb money is still stuck near complacent highs. This kind of shift often signals the start of a momentum build-up, not a crash. When smart money flips from defensive to offensive, it means liquidity's rotating back into risk. We saw this pattern before every major rally. Smart money moves first, retail follows late. So the message is simple. Watch the pros, not the crowd. Because when smart money starts buying, the next leg higher might already be underway. We've got another data-heavy week ahead, but this time, it's all about inflation and the Fed. Last week was relatively quiet, but this week, things are heating up again. Starting off the week, we've got a few lower impact reports like business inventories and industrial production, but the real focus begins on Tuesday, with Fed Waller taking the stage. Traders will be listening closely for any shift in tone, especially after recent mixed signals about whether the Fed is done tightening or still leaning cautious. On Thursday, we'll get jobless claims, which will give us another look at how resilient the labor market remains. If claims come in lower again, it strengthens the argument that the economy's holding firm, and that could push expectations for rate cuts even further out. But the main event this week is Friday, CPI and inflation expectations. This is the real market mover. We've got both core CPI and headline CPI, alongside the Michigan inflation expectations data. Traders are watching to see if inflation stays sticky or starts to roll over again. A surprise uptick could rattle markets, while softer numbers could reignite the bullish narrative and bring volatility to both yields and equities. So, this week is all about the Fed's tone and inflation's direction. If you're trading, be ready for volatility into the end of the week. CPI Friday could easily decide how we close out October. Hopping over to the technical charts. This move on the VIX, we pretty much saw it coming. Our Discord community was already anticipating a bearish candle on Friday after that massive volatility spike, and it played out exactly as expected. VIX ripped higher earlier in the week, but as I mentioned to members, the momentum indicators were already hinting at exhaustion. You can see it clearly now. MACD is flattening, RSI is curling down, and momentum is fading even though the overall structure remains bullish. This tells us volatility isn't dead, but it's likely cooling off short term. If VIX continues to dump from here, the key supports to watch are 20, followed by 18.3 and then 17. Those are zones where volatility could stabilize before another potential leg higher. But if VIX holds above 20.7 and starts to rebound, the next resistances to watch are 24.4, 26.3, and 29.9, and above that, 33 becomes the next major volatility ceiling. So for now, short-term downside momentum is taking over, but the broader trend is still bullish, meaning volatility could reload before another spike. That's why real-time updates matter. Members who followed the flow on Friday already saw this coming before the red candle even formed. Hopping over to the S&P 500 SPY ETF. Despite Friday's bounce, most of the momentum indicators, like MACD and RSI, are still trending lower, meaning downside pressure hasn't fully eased yet. However, short-term signals are flashing oversold, suggesting a possible relief push before the next move. The first key resistance to watch is 668.7. This is where we'll see if buyers have the strength to reclaim momentum. If SPY rejects there, it'll likely resume the downtrend towards 660.5, followed by 652.5 as deeper supports. But if it breaks and holds above 668.7, we could see a short-term push higher towards 673.1, and potentially 677.3 if indicators continue to recover. Momentum remains bearish but oversold, meaning SPY could get a temporary bounce, yet whether that bounce holds or fades will set the tone for the rest of the week. Hopping over to the Nasdaq 100 QQQ ETF. QQQ closed the week around 603, showing a bit of recovery, but just like SPY, momentum is still bearish overall. The indicators are starting to show some oversold conditions, which means we could be setting up for a short-term bounce, but that bounce needs to prove itself. Looking at the chart, MACD and RSI are both pointing down, confirming that sellers still have control for now. However, the momentum loss is slowing, which often happens before a potential short-term reversal. The immediate resistance to watch is 607.8, and above that 613.1. If QQQ rejects these levels, the downtrend is likely to continue, bringing us back towards supports at 598.2 and 589.7. But if we break above 613.1 and manage to hold, we could see a stronger push towards 623, which remains the upper resistance zone to beat. So for now, momentum remains bearish but oversold, suggesting a bounce could be in play. What really matters is whether QQQ gets rejected off resistance again, or if the indicators manage to turn up and flip the trend back in the bull's favor.
Thank you so much for sticking with me until the very end of this video. Your support really means a lot to me and to this channel. If you found value in today's breakdown, please don't forget to hit that like button and share this video. It helps the channel grow and keeps me motivated to bring you more content every single week. And for those of you who want to take your trading to the next level, don't forget, we have our Algo platform and Discord community where you'll get real-time intraday updates and swing trade alerts. You can join us now through Patreon and check out the latest promotions for Algo discounts. Best of all, there's a 1-month risk-free trial. If after 1 month you're not satisfied with the results, you'll get a full refund. No questions asked. So why trade alone when you can trade smarter, with proven strategies and a supportive community? Hop over to Patreon, join us today, and see the difference for yourself. As always, trade safe, invest wise, and I'll see you guys in the next one.